Do you think updating your accounting software is an absolute waste of time? I'm here to convince you otherwise. I'm going to share with you a situation where I helped a trade client of mine increase their profitability by 25% as a direct result of implementing a weekly reconciliation process in their Xero. So, if you're like most business owners, you hate bookkeeping. The idea of reconciling the accounts, trying to balance everything out, or work with your bookkeeper or accountant in order to clarify where the expenses are going and where they should be allocated seems like a complete waste of time. But the reality is that there is a principle that we refer to as what gets tracked gets measured, and what gets measured gets improved. And your accounting software is no different. Now, I agree. The allocation of the data and the actual reconciliation of the accounts in itself is a waste of time, and you as a business owner shouldn't do that. But what you should be doing is using that data in order to aid in your financial decision making in your business. I had a particular trade client who ran a landscaping business, and they were run off their feet, and they had no time to do their reconciliation. And in fact, they were waiting to the end of the quarter in order to do those reconciliations just to do their business activity statements. Now, the reality was, in that current workflow, with data that was 3 months old, it was actually no value to them. And as a result, it wasn't moving any needle forwards as aside to keeping the ATR off their back. Now, we implemented a weekly reconciliation process by implementing a professional accredited bookkeeper who was proactively reconciling the accounts every single week. For the first couple of weeks, he had to provide some insight around what certain expenses were, but we created some rules and frameworks to get to a point that over the course of the first month, he never had to answer another query again. Complete monkey off his back. The second thing is that we provided a cash flow forecast tracking against his monthly budget to date. And each week it was like he was running a marathon trying to claim that first place. We'd set a target of $100,000 a month, and each week we were allocating $25,000 of revenue working towards that target. We were tracking the expenses as they were incurred. We were having conversations around his accounts receivable and accounts payable, and basically providing with the clarity that he needed to make sure that he could invoice his clients and get paid, that he could hold his team accountable to ensure that they weren't spending excess funds on purchases and cost of goods, that he wasn't overspending on any of his operating expenses, and that he was chasing up his clients to pay his bill on time and in full. As a result, we did this for 3 months, and we took his average revenue from $100,000 to $125,000 a month, and we're able to increase his profitability from on average about 10% profit to nearly 25% profit, which is a substantial increase from where he was. Now, you think your accounting software isn't important anymore? What could an extra $25,000 a month do for you in your business? This just goes to show that the principle of what gets tracked gets measured, and what gets measured gets improved runs true, and it could run true for your business. So if you're interested in strategies like this, we've developed a 40-point financial performance scorecard, which is basically the top 40 things that you can do to improve your finances and get on track for financial freedom faster. The average score is about 18 out of 40, so if you're curious to find out how well you're doing, click the link below or jump into my bio and let's see how well you're tracking towards your goals.